Most traders look at prop firm and think if I get funded, maybe I put a few thousand here or there. Nice, but not life changing. That happens when you treat it like a side hustle or you try to max leverage on one account and burn out. What if you could turn out about $5,500 of working capital into $100,000 per year, conservatively, repeatedly? So that's what I'll show you step by step using a 200K prop firm account that will scale up to 2 million prop firm portfolio size. That's what we see now, not a perfect run fantasy. This is based on what we've actually operated over the last years. Slower, safer, predictable. Quick social proof in a bit. I show you a $10,000 lifetime payout on ftmo. Let me actually just right now share my screen with you so you can see that kind of payout we can get. You should know this video. I have a few notes on my computer, but it will be raw without any editing, unlike the coming one. So if you want to subscribe to don't miss the next videos as well, that will be very interesting and a bit more dynamic. If you follow the channel since a bit of time, this video is without editing, as you might know, just me basically presenting the blueprint here. You can see $10,000 overall rewards. So that was on one of our payouts. I'm not sharing everything with you, but that's just to show you that we are real here. So stick around till the end. I'll walk through the numbers live on a spreadsheet so you can check it yourself. And by the end of the video, I also mention an opportunity you can grab directly yourself for free here. So this is not financial advice. Prop firms mainly profit, you should know, from challenge fees, not your payouts. So your incentives and theirs are not naturally aligned. Our approach using hedging strategy to make the math work conservatively over many cycles, at the contrary, is aligned with you. So that's the big point we bring here, basically aligning our investors with the prop firms. ftmo, you might know this company. ftmo is one of the largest names in the space. Their maximum allocation is 400K per trader, and the split is 80-20 like all prop firms. So you don't get, if you get 400K, you don't get there directly most of the times. You have to pass phase one, phase two, and then funded stage, which can take quite a bit of time. So where most traders fail is in the process design, in the sense that they don't have any plan to finance hedge collateral. They don't use the strategy, and the challenge fees are just burned out. They also overtrades on early accounts and resetting repeatedly without any strategies. Treating each account as a hero trade instead of like a portfolio engine is a wrong way as well. So we focus on the macro perspective on our side. So we don't wing it. We run a paired structure, the prop account taking the directional risk, and a separate broker account placing an offsetting hedge. So that's our strategy. When the prop side loses, the hedge side often wins, if not actually it 100% of the times it wins. It's like a balance, as you might already know, the hedging principle. So the portfolio stays net logical in the bad case scenario when we lose on the prop side, or making even more profits when we profit on the prop side. But we'll check the spreadsheet just in a bit. Maybe it'd be clearer for you. So continuing on that forecast, we'll be starting with the 200K account that will scale until 2 million prop firm portfolio. The required working capital for that is about 5,500 to start the process, and we'll see how we can get to $100,000 per year, starting with a 5,500 required working capital. This is after challenge fees, hedge collateral flows, and the current losses that happens when we fail and we have to rinse and repeat the process. So let's start with one 200K FTMO pass phase one and two using the hedge strategy. So phase one target is typically 10%, as you might know on FTMO or many prop firms. That's $20,000 we need to do on a 200K account. The hedge collateral for this stage is roughly 2000 that we need to be safe. So if the prop challenge fails, the hedge is designed to offset all the losses on the on the on the challenge side, in the sense that you might know a 200K challenge cost about $1,200, 1250 about $1,250 on FTMO. So we'll make back this amount on the broker side to rinse and repeat the profits. So that's what we do basically to get there. Just to show you how it works in details with the strategy. I'll show you the spreadsheet just in a bit, but let me walk you through the whole process before. So how we reach the 2 million allocation, you might ask you might ask yourself, in the sense that we can only get 400K portfolio per name. That's what we do mostly for our US investors at the beginning, what we were doing for our US investors, but now it's more for everyone. Our last investor is from France. He is eligible for FTMO, but we've started all the accounts without his own name. So we are using basically the company's names. So we don't have any issues for the operation. This streamlines operation and makes it a real passive income for you. So that's quite interesting. And basically, to build a 2 million allocation, we just need 5 different accounts on FTMO with 400K each. That would bring 5 times 400K, 2 million portfolio for the investors. So that's how we work it. And yeah, to quickly come back to the phase one, I've mentioned if we fail, we make profit back on the broker side. That allows us to rinse and repeat the process. So the psychology is different when you're running a portfolio instead of a single hero account, if I can say. You're no longer praying for one perfect run. You're managing a machine. So why the hedge is key? This is very important to emphasize on this point. Passing challenges without a hedge turns into a stress test. A single spike or news week can wipe a phase. With the hedge, we are engineering outcomes, in the sense that if prop account loss, the hedge account wins. If prop account gains, the hedge account loses, but that's part of the way, and it's counted in our hedging ratio. That's why we can, with this strategy, operate multiple accounts at once and accept that some attempts will fail. The system expects it, and it's budgets for it. So it's part of the process to breaching some accounts, in a sense. We might even make money by over hedging. I'm not entering into details in over hedging in this video, but when we'll check the spreadsheet, you'll see unfunded 3, 4, and 5. So at certain steps of the process, we're making profit by failing on the prop side. So think airline scheduling. Not every flight arrives early, but the network arrives on time overall. So that's basically a kind of analogy that might help you understand the process. We might have some challenges that not get to the target as soon as expected, but overall, the process on average will yield you really interesting profits, as we'll see just in a second. About the risk and capital management. So we're starting with 5,500 required working capital, like I've mentioned, and we use this to activate the challenge fee of the challenge on FTMO, that is about 1,200, and the hedge collateral, that is about 5,200. So it's about $1,250 for the challenge, $4,250 for the hedge. That's about 5,500 total. So let's jump actually right now into the spreadsheet, so I can quickly cover with you how it works, the steps, and how much it can return on a yearly basis and how we can get to this 100K per year scenario. So we're starting with the 200K account FTMO here, as you can see on top left on my screen. The total portfolio would be 1 million in that case. So you 5 times the 5,500 cost for 200K, that will give you the 1 million portfolio required working capital. And you double that number to get to the 2 million portfolio required working capital. So might seem a lot at the first time this, this is the first time you're seeing this spreadsheet, but most of our viewers are familiar with that. So let me walk you through it. It's not very difficult. You have two main columns. The if prop account fails, two main scenarios, I mean. If prop account fails, here, if prop account wins, and we will have the different columns. So let me go one by one. We have the steps with phase one and phase two that you might be familiar with. That's basically the 10% target on phase one, the 5% target on phase two, which is the two other columns, targets in dollars, targets in percentages. Here we have hedging collateral. That's how much we need on the broker account to run the step correctly. So that's $2,000, like I mentioned, for the phase one and about 2,300 for the phase two. That might vary a little depending on the challenge cost that is fixed in euros. So it depends a bit of euro USD exchange rate. But overall, we are close to 5,500 counting. If you check the formula on top left, it's basically the challenge cost plus the hedging collateral for phase one and two. So let me continue with the columns. Hedging collateral is basically how much we need on the broker side to run the step. And here you have the two scenarios. So profit on broker account, that means BR key means broker. So if prop account fails, we have profit on broker account. If you check the other scenario, if prop account wins, we lose on the broker side. So we have losses on the broker account. Then this column is broker account balance. So that's basically the broker account balance at the end of the stage. It's just the sum of what we needed on the broker account plus what we made in case of failure. So here it's basically 2,000 plus $1,333, giving you $3,333. With those 3,300, you basically rinse and repeat the process, purchasing back a challenge at $1,250 and try back your chance with the same collateral since you didn't burn it. You didn't burn this collateral, you made profit at the contrary. While if you were reaching the target, so the $20,000 here on the phase one, you would pass phase one. So you would burn the collateral, so you would lose $2,000 here. That's if prop account wins, we make a loss on the broker side. Here, $2,000, but we move to phase two. Here, phase two, that's quite the same thing, adapting the hedging ratio, so we make more profits in case of failure to pay back what we've burnt in phase one. And we burn about 2,300 in case of a win. So it costs us about 4,300 hedging collateral to pass the challenge. Once we pass the challenge, funded one is just a small profit to request challenge refund. The challenge the challenge fee is basically refundable, as you might know. So that's why the prop firm payout is here, $1,240. That's basically 80% of $50 plus the challenge fee, minus $50 of transaction. We have some transaction fees when we receive the payout, etc. What you need to know at Funded One is that we reinvest those profits in next hedging collateral. Like I've mentioned, this is the starting cost, not the starting cost, but basically the required working capital, what you need to start the process, what you need to put in the machine, to be precise. So that's the challenge cost and the hedging collateral. At this stage, we've burned all the hedging collateral, but we get back the challenge fee that we reinvest in hedging collateral for Funded Two. We have a higher target at this stage, about 1.7%. That's about $400 on a 200K account. By reaching this target, we will receive about 2,700 from ftmo that will be again reinvested in the next hedging collateral for fund three. And that's when it becomes interesting. As you can see here, by failing, we'll make a net profit of about $1,300 in your pocket by failing. If we pass, we take $1,200 and move to funded four. That will allow us to receive about $2,000 in case of a pass or 800 in case of a breach. Overall, as you can see, those three payouts, if you check here on bottom right, it makes about $5,000. So that's the number you can see here. That's how much you make in about 6 months with this process and a 200K account. So per year, you can get about $10,000 with a 200K account with this scenario. How do we get 200K per year? You can ask me. That's not, that's a zero is missing. I agree with you. So let me walk you through the compounding process, because that would be the interesting thing with that. So let's say after 6 months, you have about $5,000. That's roughly 5,500. So let's say you've made 5,500 just after 6 months and you reinvest, so you compound at the 7 months, let's say. You compound buying another 200K account. So now your expected annual return is not $10,000, as you can see here, but $20,000. You doubled your portfolio size, you doubled your expected annual net return. Those numbers are just basically like what we've covered, the net profit for investor, as you can see in the formula on top left, times two, meaning we can do this twice a year. So here it's $10,000 for 200K, but now after the month 7, if you compound, you have 400K. So in the next 6 months, you are about to receive $10,000, which is half of the expected annual net return. So from month 7 to months, let's say 13, you make 10K. Let's say month 14 to make 11K. That will be required to buy another 400K. That's the required working capital, as you can see, for a 400K account. So at month 14, you double again. So you're now at 800K portfolio size at month 14. So we are in second year and 2 months. Now, when you are at this stage, after 6 months with 800K, you receive about $20,000. If you make 20,000 per year with 400K, you make 20,000 every 6 months with an 800K portfolio. So you receive $20,000 by the month 20th, roughly. By the end of the second year, let's say, you receive $20,000. And with those $20,000, you can basically purchase almost four. If I'm changing here, you can see 22. So let's say by the end of the year, you'll make 22,000. So in 7 months, you can buy another 800K. So what it makes you move from 800K to 1.6 million at the end of the second year. So now you're just missing 400K because you have 1.6 million to reach the 2 million portfolio size target. So how much collateral do you need to add the last 400K? That's here, 11,000. And with your 1.6 million portfolio size, you can expect this to come pretty fast. So 1.6 million, it's basically 4 times the return of the 400K. So that's 80,000. So to receive 10,000, $10,000, we would basically have to wait. We make 20,000 every quarter. So that's a month and a half, about 45 days, let's say 2 months to be conservative. So starting year 3, the second month, you would have 2 million. So basically saying starting year 3, you would have 2 million here. So you've invested only 5,500 and you now have a 100K per year solution. So that's the long path. If you start with 400K, it's way faster. That's basically the same thing, but let's quickly run the number. You'll see it's way faster with 400K. If we make $20,000 per year, this means, let's say after month seven, we can already double buying another 800K. So we move to another 400K. So we move to 800K at month seven. Then 6 months later, we made 20,000. Let's say 22, like we've seen. So with those 22, we can buy 800K more. So at the beginning of the second year, we are already at 800K. Those 800K, actually, no, at the end of at the end of the second year, at the end of the first year, we are at more than that because we compounded at 800K after the 7 months, if you remember. So we have 800K at month seven, and this makes us $20,000 in 6 months because we have 800K. So at month, basically month, if you add 7 months to make 22, that's 14. At month 14, you can compound again buying 800K more. So you now are 1.6. And you need to wait just 2 more months. So at month 16, basically, in less than 1 year and a half, you build your 2 million portfolio starting with a 400K account. So if you put a bit more required working capital at the beginning, in basically less than 2 years, 18 months, like we've seen. So if you uh, if you have month one to month 18, that's 1 year and a half, you build a 100K per year solution with only $11,000 required working capital. So that's quite interesting solution, as you might think, I guess. If you want the spreadsheet yourself in details to check the numbers, you can go on my website and reach out to me on WhatsApp. I forward you a copy. You cannot book a call with me at the moment because the doors are closed. So I not redirect you to book a call with me to join. It's actually at the moment not possible. But if you want a free 50K account on My Funded Futures, we're still running our offer. We are offering this summer a free 50K funded account. So just write funded in the comment section. And if you want to see our hedging strategy structured in an edited video on a step-by-step video that is basically detailing everything, make sure to subscribe because that's coming very soon on the channel. That's mostly everything for now, and I'll see you in the next one.